Yes, we are heading into the great unknown. At least that's what it feels like as the new year approaches. So will life get back to normal and our economy fully recover in 2021? Or is more pain and uncertainty in store along with perhaps some new surprises? Well, it's that time again, time to tune out the hype and focus on the facts. Facts that matter to you, the income generation. Let's get started. Get ready to separate reality from myth.
Joining me right now is Sound Income Strategies founder and CEO David Scranton.
They've created a new type of inflation, and although markets have always been an emotional place, they seem to be even more of an emotional place these days.
Jeffrey Small, market watcher, is with me.
Stock market dynamic is getting ready to significantly change.
So let's bring in our co-host, Jeff Small, president of Arbor Financial Services, and also the brand ambassador for the Retirement Income Store. As I've said before, obviously no one has a crystal ball, and the future is always uncertain. However, forecasting the future is an essential part of what economists and financial advisors do on a regular basis. We study and follow the markets closely in an effort to make accurate forecasts. But as the saying goes, stuff happens. Heading into 2020, no one could have foreseen the scope of the coronavirus pandemic or predicted that it would lead to a level of economic devastation not seen since the Great Depression. There was no way to predict that it would have turned our lives completely upside down. Heading into a new year, we're finally seeing some signs of brighter days ahead. But can we trust them? We'll talk about that right here on today's show, and we'll look at what some analysts are predicting in terms of best case and worst case scenarios for 2021. We'll also share tips on what you can do to prepare financially for this new year, no matter what happens. And joining me and my co-host Jeff Small will be our good friend, author John Najarian, co-founder of MarketRebellion.com. We'll also be talking to Dee Carter, president of Carter Financial Group, a retirement income store located in Midland, Texas. And before we get to our first guest, let's talk about where things stand with the markets and with the economy as this historically challenging year draws to a close. It was the best of times, and it was the worst of times. Charles Dickens wrote in A Tale of Two Cities. Those words certainly seem timely today when you look at what's happened on Wall Street compared to what's happened on Main Street. In the week since November 3rd and the presidential election, the stock market has soared. All three market indices finished last month with gains of between 10 and 11%. The Dow Jones Industrial Average also hit 30,000 points for the first time ever just before Thanksgiving. As of mid-December, the market remains at or near those record highs. Additionally, there's been some genuinely good news driving all of this investor optimism. The biggest piece of good news, perhaps, is that 3 drug makers now have promising COVID-19 vaccines that are approaching approval. And the FDA says it's optimistic that the first wave of vaccinations can begin this month. Then there was the election itself. If nothing else, it revealed that Republicans and Democrats will have to split power among different branches in the coming years, which Wall Street actually favors. Now, put all these things together, the end of a long, divisive election, a light at the end of the coronavirus tunnel, and a record high stock market. And it looks like the best of times. However, even as the markets were soaring to those record peaks in November, so were case numbers, hospitalizations, and deaths from COVID-19. In short, it was this country's worst month yet for the pandemic, with new cases topping 100,000 per day almost daily, and the death rate climbing over 270,000. Things have only gotten worse since then and are expected to continue getting worse in the months ahead. The Centers for Disease Control has said December, January, and February are likely to be, and I quote, the most difficult in the public health history of this nation, largely because of the stress that's going to be put on our healthcare system. The CDC estimates COVID-19 deaths could total nearly 450,000 by February. It remains to be seen what all this will mean, not only for the healthcare system, but for the economy overall. It is a troubling question, however, considering that lawmakers have yet to approve another round of economic relief. They do seem to be getting closer to a deal, but even if one is approved by the time this program airs, which is unlikely, there are concerns that it may not be enough to offset the millions more potential layoffs, business failures, and loan defaults that the pandemic could trigger before the vaccine ultimately brings things under control. So unfortunately, that could take from 6 months to a year in total. It also might not be enough to justify the stock market's extreme optimism. Clearly, Wall Street has already priced more federal aid into the markets. But what happens if the relief doesn't arrive in time or isn't nearly enough? The answer to that may determine whether we see the best of times or the worst of times in 2021, and to what extent. We'll talk more about that coming up in just a bit. Right now, let's welcome my good friend and co-host, Jeff Small, president of Arbor Financial Services, a retirement income store in Melbourne, Florida. Jeff is also the Amazon best-selling author of the book, Turning Financial Planning Right Side Up. We also want to bring in our first guest and a good friend of the income generation, John Najarian, co-founder of MarketRebellion.com. He's an options trader and also co-author of the book, Follow the Smart Money. John, thanks so much for being back here with us.
Thank you, Jeff. Thank you, David. Great to be with you guys.
So it's funny, you know, we spoke in June, we spoke in September, and you said, okay, I'm not surprised that, you know, the market should be going up. Are you at all surprised that we've hit 30,000 on the Dow, created new records, record after record on the NASDAQ, and even the S&P 500 at new record highs?
Well, given the construction of the indices these days, David, no, I'm not terribly surprised. I think the market overall was pretty happy about a divided Congress. That still remains to be seen, although I think we're all leaning towards, you know, the Republicans retaining control of the Senate and Ms. Pelosi losing a lot of her majority in the House, but still the majority place in the House. And I think that means that things aren't going to change much, and the market, you know, is pretty happy about that, I guess.
Yeah, you actually said as long as power is split, a Biden presidency would not scare the markets. You said the thing that would scare the markets the most is a blue wave, and I think we all agreed on that. So how about this rotation we're starting to see toward the higher dividend value stocks? I know you thought maybe that would happen first quarter of the year. It seems to have happened maybe a couple months earlier than that, at the beginning of November. What are your thoughts on that? Do you think, now that it's here, you think that should continue for a while now that we have promise of a vaccine?
Yeah, David, I tend to agree that, you know, I might have been looking a little too far out into the future when I said maybe we'll see it in the first quarter of next year. We obviously started to see a lot of the infrastructure plays, which were battered stocks, you know, from Vale, VALE, and Cliffs, CLF, and Letter X, US Steel. We started to see money go in there just ahead of the election. It definitely accelerated during and after the first week of the new November timeframe. And then I think those continue to play out along with energy stocks like BP and ExxonMobil well into 2021.
Good. I hope you're right, because for most retirees, being overloaded with technology that doesn't pay any yield is not the answer. For most retirees, it's those high dividend value plays that make sense for them if they're looking for income and a little bit of growth. Jeff?
So John, you know, I'm waiting on the Santa Claus rally because it still hasn't happened yet. So I think we're all kind of waiting and hoping the second half of December catches fire. But I think in some ways the Santa Claus rally has actually already been here, because FactSet is claiming a 22% increase in net profits next year, which puts the 12-month forward PE, or price to earnings ratio, on the S&P at 22. And if those numbers materialize, you know, which they probably will be very close to those numbers, if they materialize, shouldn't we be buying for growth the next 12 months? What's your projection based on that the next 12 months in the markets?
I think we're going to see a nice pop, Jeff, as we go into 2021. It probably won't be quite as much as the 11% that we saw in November for the S&P and the small cap stocks in particular, almost 20% in a month. I mean, those are annual returns, we all know, not really monthly. But nonetheless, when you see that in a single month, I think that tells you that there were a lot of people getting ready for some positive moves into 2021. But I would caution folks that in the first couple weeks of the new year, I am looking for us to make a bit of a correction and perhaps a bigger correction after the second quarter ends, because it's just been so good, Jeff. The trees don't grow to the sky. And as good as it's been, I think we'll see a little bit of a pullback after a very aggressive start of 2021.
Well, you just stole my next question, John. And so structurally, though, aren't there some things in the market that will happen around the middle of next month as far as hedging strategies go? Because option prices are at their highest they've ever been. Aren't there some things that are going to stop? There's going to be some hedging that's going to stop that could potentially affect some of the values in the market around the middle of January. Is that what you're talking about?
And John, I can't wait to get your answer to that. We need to take a quick commercial break, Jeff and John. So we'll get to the answer as soon as we get back. And you stay with us. We have a lot more from John Najarian right here on the Income Generation. We'll be right back. Several major market analysts are currently predicting that the best of times will win out in 2021, at least where the economy and the financial markets are concerned. Both JP Morgan Chase and Morgan Stanley have released bullish market forecasts for next year. And much of their optimism is based on the particulars of the November market rally. In that surge, cyclical stocks and value stocks in energy, financial, industrial sectors all led the way. And this indicates that the market strength is broadening beyond the big tech and software stocks that performed so well throughout the COVID-19 pandemic. Optimistic forecasters expect that rotation to continue and to broaden in 2021, helping to push the market as a whole even higher. If a best-case scenario unfolds with the vaccine, then many other businesses and industries hit hardest by the pandemic, such as airlines, bars, restaurants, could also come roaring back by mid-year. However, it isn't just the vaccine that has many forecasters banking on the best of times next year. The election outcome was also seen by some as market-friendly. Yes, there are potential concerns about the possibility of Joe Biden rolling back the Trump administration's big corporate tax cuts, but some analysts agree he's unlikely to propose any tax hikes while the pandemic is still an issue. And what's more, Biden will likely need control of both the House and Senate to pass any major tax reform. Some analysts believe the Republicans will win the Georgia Senate runoff, which is coming up in January, giving the GOP the majority, at least in the Senate. Again, the stock market traditionally likes a power split in Washington, and right now investors seem optimistic that they will continue to have one in 2021. Another thing the stock market loves is the kind of loose monetary policy the Federal Reserve has followed ever since the end of the financial crisis. And that's also unlikely to change under a Biden presidency. He has already tapped Janet Yellen as Treasury Secretary, and she previously served as head of the Federal Reserve during much of the Obama administration. That's one sure sign that things like unchecked quantitative easing and near zero interest rates won't be going away anytime soon. And that makes Wall Street happy. Why? Because these things create cheap money and push everyday investors up the risk curve, meaning into the stock market. There's also other indicators to support a potential best of times scenario in 2021. The housing market has been strong since spring, thanks largely to record low mortgage rates and high demand, and many analysts see that trend continuing into the new year. What's more, unemployment numbers have continued to shrink steadily since the height of the pandemic back in May, or at least I should say the lockdown portion of it back in May, and many new job opportunities have emerged in different sectors as a result of this pandemic. If all these trends can continue into the new year with the help of a vaccine and barring any big setbacks or surprises, Wall Street's optimism may prove justified and the best of times could get even better. But that might be a big if, however, which we'll be talking about coming up in just a bit. Now let's bring back in Jeff Small and John Najarian, co-founder of MarketRebellion.com. Jeff?
Hey, John. Sorry we got cut off at the break, but listen, we know there's going to be some volatility in January. Does that have anything to do with my last question, which is the hedging strategies and option prices being at their peak and hedging strategies may not being utilized around the middle of the month? The structure of some of those things are going to change that market dynamic, and maybe a combination of another spike in the virus. Could that affect more volatility?
It sure could, Jeff. We all know the vaccine's being rolled out right now after the emergency use authorization. So that's the good news. The bad news is that it could get pretty bleak. And those hedging strategies that you talked about, Jeff, a lot of folks that have that protection into January need to roll that, or it just goes away. And so many of us wouldn't get into our car without insurance. I think a lot of those big hedge funds and people that are managing money are looking the same for continued coverage. And that means they're going to have to roll out into the future, probably into March and April timeframe. That means January could be pretty dicey right around the time that the new president is installed.
Mm-hmm. John, what do you read from the options market? What is the options market telling you about different areas of the stock market right now?
Right now, it's saying that there's an awful lot of optimism for the banks, for financials, which there hasn't been in years, literally years. There's a lot of optimism in the energy sector. The places where people are buying a lot of protection, Dave, are some of the big stocks that have run up so much. They worry about, the Zoom video meetings and the DocuSigns and some of these companies that have had 300% and 400% returns in 2020. I don't think they're looking for that to end, but they're perhaps looking that maybe we see a little easing of those kinds of returns.
So going forward then, I don't think the market, John, is really more codependent, let's say, on liquidity than it is fundamentals. Because I think the fundamentals in 2021 are going to be more impactful than ever before since we've hit these new peaks across the board, not just in the indexes, but in many stocks. What do you say?
Yeah, I think Jeff is spot on here as far as fundamentals are going to be much more important because we're not just going to be worried about that Groundhog Day, that, every day is the same and it's getting worse and worse as far as the cases, hospitalizations, and so forth. Once the vaccine gets widely distributed, I think, Jeff, you're right. We're going to focus on fundamentals. And that'll mean some of these stocks are looking a little too pricey, just like we've discussed.
So what does that mean for 2021 then for our income generation viewers and listeners? He said possibly a pullback in the first quarter of the year. But, where does the market end 2021? Does it end up? Does it end down? What's your best projection for what you're seeing moving forward? I know I'm asking a crystal ball question, but hey, your crystal ball is better than most of ours, so give it your best shot.
Sure, Dave. I think we're going to see a correction, whether it comes in the first quarter or at the end of the second quarter. I think we'll see a dip of perhaps as much as 10%. And then I think that should be bought because interest rates aren't going anywhere. The Congress, unless it really flipped blue, and that I don't think it will, and even if Georgia didn't go to the Republicans, the House isn't nearly as strong on the Democratic side as it was in 2019. So I think all of that plays into the idea, no new taxes, no move by the Fed on interest rates. So by the end of the year, we will be higher than where we start 2021.
Great. Okay. The most important question of the day. As an ex-football player, who are your 2 or 3 top picks for Super Bowl going into 2021?
Oh, I was hoping you were asking me about Trevor Lawrence. But as far as the Super Bowl, I think the Saints look fantastic. On the other side, I think Pittsburgh also looks fantastic. So, a lot of these teams have had to deal, of course, with COVID and players not being available. But if you have Drew Brees back, I think the Saints, and then I think Pittsburgh because they've been there and they've done that.
And I don't know. Maybe I'm an optimist, but some people are still saying they think Trump is going to be president in January. Well, I still think Tom Brady has a chance if he figures out how to play within the parameters of his team. I'm not going to rule out my buddy Tom. So anyway, John, thanks so much for being part of the show. Once again, we really appreciate it.
Thanks, David. Jeff, have a good one, folks.
All right, and you stay with us too. We have much more coming up right here on The Income Generation in just a moment. We'll be right back. I'm David Scranton, founder of the Retirement Income Store. If you're in or near retirement, are you certain you have the right retirement plan in place? Do you want to help ensure your nest egg will last you all throughout retirement? Take our retirement review quiz and find out in 5 minutes or less if you're doing everything you can to achieve a more successful retirement.
Don't waste any more time. Visit myfreeretirementreview.com to find out if you have the right retirement strategy in place.
I'm David Scranton. During my career, I found that most baby boomers have done a great job growing their retirement savings, yet many don't know how to convert their savings into steady income. And that is why I built the Retirement Income Store, to help hardworking Americans preserve their assets and establish steady streams of income.
If you're 55 or older, our free retirement income kit is for you. It's chock full of information you need to know to get steady income during your retirement. Call 866-710-1749. Online at theretirementinComeStore.com.
Of course, we're all hoping for the best of times in 2021, but it's not hard to imagine a different scenario. As I already mentioned, regardless of how things ultimately play out in the coming year, health specialists have warned that the next 3 to 4 months are going to be extremely challenging when it comes to the pandemic. Obviously, the sky-high stock market's looking past all that. In fact, way past it. The stock market's always forward-looking. However, as I pointed out on other recent shows, these days it seems to be looking forward by a full year or maybe even more, focusing on a day when the pandemic is no longer a concern and the economy has fully recovered. Could this actually happen within a year or less? Possibly. Although there are some less promising possibilities we all need to consider. It's safe to say a lot of things are depending upon the vaccine. If the rollout is timely and successful and the vaccine's effective, then that's great. But what if case counts continue to rise even after the vaccine is deployed? Either because the medicine proves ineffective on a wide scale, or not enough people take it, or perhaps the virus mutates. Could that force another full-scale economic shutdown like we saw in March? That may seem unlikely at the present, but so did the prospect of the first shutdown nearly a year ago. Although Wall Street seems pleased with the election results and the prospect of a split government, also keep in mind that partisan politics is exactly what delayed the release of more economic aid. So what if the Biden administration can't work across the aisle and the same kind of gridlock continues or even worsens? That could hinder not only more coronavirus relief, but a host of other projects and programs and actions essential to workers, businesses, and the economy in general. There's also the chance Democrats could win the Senate runoff in Georgia. And if that happens next month and they take full power in Washington, it could be a different story. Could that trigger panic on Wall Street, especially since it would be happening during the darkest days of the pandemic? What about the lingering psychological effects of this crisis? Are they going to limit how quickly or extensively Americans rush back into restaurants, back into theaters, or back into ballparks? Of course, only time will tell. However, that doesn't mean that you should have a wait-and-see attitude where your finances are concerned. We're going to be talking about this coming up in just a bit. Now it's time to welcome back my good friend and co-host, Jeff Small. So Jeff, that was a unique interview. We got to interview several people at the same time, John Najarian and at least one of his pets, correct?
Yeah, I thought someone was coming through his front door or something, or bull rushing his house with all of his dogs barking in concert. But anyway, it was just his wife, so they must have been really happy to see her.
Yep, so he thinks that, from his standpoint, the market's likely to take a dip, not a bear market, but maybe a 10% correction at sometime after the first quarter of the year. I think you guys kind of agreed that the Santa Claus rally is probably over. And then that, I guess, just becomes a buying opportunity into those high dividend value names that are potentially appropriate investors for our viewers, for our listeners. Is that what you took from the interview?
Boy, it really does, Dave. I mean, it's going to be a great opportunity for investors to seize the moment when that dip occurs. And I think that it's interesting that John keyed on the fact that the hedging strategies that have to be rolled over by the largest institutional firms out there now have to be rolled over from December, and they have to rebuy them all the way out till March or April. And there's not going to be any hedging strategies to support the market prices of these stocks because option prices are at their all-time high around the middle of the month. I think what's unique about that he pointed out and confirmed for us is that we're expecting, in our own internal calculations, a massive spike in COVID by the middle of January as a result of all the Christmas travels and the exponential growth we've had in COVID so far. We're at 200,000 cases a day. We could see 400,000 to 500,000 cases a day by the middle of January if the numbers are correct. If that happens, it could have a nasty effect on the markets and prevent or create a very good buying opportunity.
And that's all that would be, is a great buying opportunity, because the market's looking 6 or 9 months ahead, put us to a point where the vaccines have gotten us through, hopefully, a lot of the crisis component of COVID-19. So that would really just be an emotional reaction by the markets, maybe just giving back some of the growth they've had over the last couple of months, which, as you say, does create a great buying opportunity. So, personally, I'm kind of hoping for that because I'd expected a pullback before, which didn't happen. Right after the election, things just really took off. So it'll be interesting to see what happens. But, bottom line is, for our viewers, for our listeners, great advice is stay the course, invest for income. Don't worry about chasing growth. If you're going for growth, it's okay, but it's got to be secondary to income because you're retired or you're within 5 or 10 years of retirement. And if you don't make that critical shift, as I like to say, from the G to the I, from growth to income now, you could end up in a pretty sizable trough. And the last 2 troughs we saw in the market were 7 years and 6 years consecutively, right? When the tech bubble burst and when the financial crisis hit.
They really were. And with that type of a trough and that type of a time frame, what you really mean, Dave, is that it took 6 or 7 years to get back just to break even after suffering a market loss. And so it's really important that the viewers understand that. So we don't want to play the catch-up game. So investing for income, not investing for growth and returns will insulate you from that type of a scenario and having to play the catch-up game, because we're not really concerned about account value as much as we are concerned about level income and then having that income increase as prices drop in case that happens.
Sure. And, for example, one of the things I do when I talk to clients is if they have a portfolio that's paying a 3% dividend, stock portfolio, let's say, and they're projecting how much money they're going to have in just a few years, I'll project it only at 3%. So I'll take the income they're getting today. If somebody has $1 million at 3%, that's $30,000 a year, and I'll project that $30,000 growing at 3%, because that's all we can count on. The markets could go up 30% or they can go down 30%. So that's why it's so important to make that transition earlier rather than later, because I have a feeling if most of our viewers and listeners have a retirement goal in the next 10 years, I suspect that very few of them will be willing to postpone retirement by 5 years or more just because they rolled the dice a little too long.
No, that's an environment that pre-retirees and younger retirees don't want to find themselves in. They've taken a hit in the market. Now they got to play the catch-up game. Now their income plans have changed. Their assets have shrunk, and they've got to wait for those assets to rematerialize. And that's not a risk worth taking in retirement to potentially earn an extra 1, 2, or 3% over what we can get through income.
And that's why I'm glad to hear what John said, that he said, I think the more dividend-ish value stocks will continue to run for most of 2021. And I'm glad to hear that, because at the end of the day, I think too many people who are retired or close to retirement were chasing some of those high-tech growthier names that maybe they got lucky with, but they really fundamentally shouldn't have as much money invested in. So hopefully now that temptation will go away, and a lot of those folks, our viewers and listeners, can get back to basics when it comes to their money.
I think that's good, sound advice, but in retrospect, Dave, I was really pleased with the interview that Najarian had given us, that John had given us today. I think we pulled more information from him, from our talk today, than we have that's more useful for our investors and folks that watch the show and listen to the show. Don't you agree?
I do. So who are you picking? You picking Pittsburgh or you picking New Orleans? That's the most important question.
I'm picking Tom Brady or Baker Mayfield. I'm going with the underdog.
All right, well, there you go. You heard it right here on Newsmax on the income generation. We need to take a commercial break. Stay with us when we come back. We have a guest from the middle of oil country in Midland, Texas, and you're going to want to hear what he has to say. Does he support John Najarian's projection about oil stocks being strong through 2021? Stay with us. We'll be right back. I'm David Scranton. When it came time for my mom to retire, one simple mistake forced her to work years longer than she should have. And that's why I started the Retirement Income Store, to help hardworking Americans 55 and over plan for the retirement they deserve. I couldn't help my mom, but maybe I can help you.
If you're 55 or older, please claim our free Retirement Income Kit. Chock full of information you need to know to get steady income during your retirement. Call 866-314-7227. Online at theretirementincomestore.com.
The Income Generation is now available on YouTube. Subscribe to The Income Generation so that you never miss a show. You can watch all your favorite episodes now in one place, as well as catch up with your favorite financial guests. Subscribe now to the Income Generation channel on YouTube. So if you're an everyday investor who's retired or nearing retirement, how should you prepare for next year's best and worst case scenarios? Well, if you're a regular viewer, you already know the answer. You prepare for both by making sure your financial focus is primarily, or perhaps entirely, on retirement income rather than portfolio growth. And that, of course, will mean different things to different people, depending upon a variety of factors, including your retirement goals, the amount of your total savings, your risk tolerance, which is something I've been talking about quite a bit recently. You may think you have a good handle on your risk tolerance level when it comes to investing. However, it's important to realize and to revisit it on a regular basis. Why? Because it can change based upon things like your age, your life circumstance, or even changes in the market. A shocking market drop like the one we experienced in March can make you realize your risk tolerance is lower than you thought. And as a result, you may now want a portfolio built entirely around contractual investments designed to help protect your principal while generating reliable income through interest and dividends. On the other hand, you may realize your risk tolerance level has increased. In that case, you may want to adjust your portfolio to increase your risk just a bit. And fortunately, you can do this while remaining focused on income, namely dividend income from an actively managed portfolio of higher dividend value stocks. By shifting or keeping your strategic focus to income, you'll have a portfolio that helps to protect your investments from downside risk and better ensures that you'll have the income specifically that you need to meet your long-term retirement goals, regardless of market conditions, in the best of times or in the worst of times. Now it's time to bring back co-host Jeff Small, as well as our next guest, Dee Carter, president of Carter Financial Group, a retirement income store in Midland, Texas. Dee is also the Amazon best-selling author of the book, It's Now or Never. Dee, great to have you as usual back here on the show.
It's always good to be with you, David. This is a particularly interesting time in our careers and in the life of our business, I'll tell you.
It is, and I'd like to start from your perspective with what's going on with oil, because you've got your finger on the pulse. Last week, Mark Faber said oil stocks should be doing well through 2021. We just heard that from John Najarian. We're now back in the mid-40s on WTI. How's that affected your area? And you concur that the worst is over from an oil perspective? We just need some time to kind of get back to normal for profitability on oil companies.
We're getting back toward normal right now, David. But the problem is when you shut something down like the oil industry, like we did way back in March and April, and they laid off so many people, it takes a while to get that thing back rolling again. And we're at $45.15 a barrel, which is what it was this morning, West Texas crude. That's a great price for us, the companies, can start making money at $40 to $45 a barrel. So they're starting to line up the rigs. They're starting to rehire the people, put the people back on. So we're seeing an uptick in the economy. But the sales tax revenue in Midland, Texas, for the last quarter was down 33%, which gives you some idea of how people are not buying anything right now because they're either not employed or they're waiting for this thing to come back. I think we're going to see it come back, and I agree with what could happen in the next year with the oil situation, as long as we don't get into a situation with Russia and Iraq and China and a situation like that.
Of course.
We're heading in the right direction.
Of course. Jeff?
So Dee, this was a really challenging year for many, many Americans, especially our clients. We've been whipsawed back and forth in the markets, and for the folks that had safe money and safe investments, boy, they were really thinking their hindsight here and making those kinds of decisions. So going forward to 2021, though, What are you telling your clients for 2021? Are we being more optimistic? Are we being more defensive? What do you suggest to your retired clients and your pre-retired clients today?
Great question, Jeff. We are looking at in our area, and we have to really talk about the West Texas area and the Texas area in itself. We're looking at a little bit more of an optimistic look if the oil companies come back and the price of oil returns. I think we can be a little bit more optimistic in where we're going with our funds. But at the same time, we're telling people, don't forget where you've gone and what's happened in the past. We've really got a track to run on. And if you're looking for retirement or immediate retirement, some of my retirees, we're not going to be sticking our neck out too far in order to retain what we've got. We want to make sure we're safe where we are as much as humanly possible and be able to retain where we are. But I think there's going to be some options out there in the next 6 months to a year, depending on the government, how they operate, that our clients should be able to benefit from that. So we're just going to have to watch it. Basically, I'm literally on a day-to-day basis right now.
You know, it's interesting. We have to take a commercial break in just a few seconds. And when we come back, speaking of government, I want to talk to you about this because your state filed the suit, went to the Supreme Court to try to keep the president in office again in January. So I'm very interested in getting your take on that and what the sentiment is for that. But we'll be back in a minute right here on the Income Generation. Much more to come from our good friend Dee Carter. We'll be right back. Welcome back. We're here with Jeff Small and Dee Carter, president of Carter Financial Group, a retirement income store in Midland, Texas. So Dee, your state, don't mess with Texas, right? Went to the Supreme Court and said you need to disallow all the electoral votes from 4 states. Help me out. What's going on out there?
Well, you know what I think the main thing is, quite frankly, and I'll share this with our watchers, is that our governor may be thinking about running for president. So he's trying to get his name out in front of everybody else right now. But what they're really trying to accomplish, obviously, is to throw out the electoral ballots. And if they do, they throw the whole thing into the government, into the House of Representatives and the Senate. And that's the whole idea behind it. Is it going to work? I don't know. 18 states now have lined up behind it as of this morning, which is a big factor in itself. Even a couple, in fact, New Mexico, of all things, a red state or a blue state right now, has asked for all of the votes to be impounded in the state of New Mexico this morning. So it's kind of like it's something rolling downhill. It's crazy what's going on. I don't know where it's going to go. I don't think anybody else knows where it's going to go. The Supreme Court has various opinions on the situation. So we're waiting to see. But it really looks like this is a last ditch effort, a last gasp effort, if you will, to get to accomplish getting President Trump back into office. But will it work? I have not a clue. I really don't know what's going to happen. I'm going to do like you guys. We're going to watch it.
Yeah, we have 1 month to go to find out for sure. Jeff?
Yeah.
Well, the basis for the legal arguments are there. There's lots of fundamental issues. Our voting, our electoral system really is what I would call porous. It's grotesquely inaccurate. There's no accountability, and the margin for error is very large. And I mean, the problems with our voting system really came out in 2000 with Bush versus Gore. So this doesn't surprise me. So the side that wins and cheats doesn't really care about how they won, and the side that loses knows the other side's cheated, cares. And then what we have is a situation where the judiciary now has got to determine how do we fix the problem or, overturn an election? And there's no way a judiciary, even the Supreme Court, is ever going to do that unless they've got, true proof of a conspiracy that's actually occurred, other than the porousness of the voting machines and the USB sticks and the ballots that have no names and, all these different things that happen. So there's no doubt it's crazy, but I don't think we live in free America anymore. I don't think we live in a free electoral process, Dee. I think those days are over.
I totally agree. And I agree with what you're saying. I don't think the Supreme Court will overturn anything. They do not want to get into the electoral situation at all. They're a judicial branch. They want to stay that way. And in order to remain that way and to retain their, if you will, bipartisan nature, although I'm not sure that's always the case either, They're not going to do anything about this. So I really don't see this happening, even if they could prove some of these things. And right now, some of the things they're trying to prove are really very, very vague, to say the least. But it's an effort on the part of the Republican side to do what they can to at least, what I hope it does. I hope it clears up some of the things that we have in the future, and perhaps we'll get some of those election things cleared up for the next go around, and maybe we won't have this problem again. But we've had this kind of stuff way back before 2000.
But Congress has to fix it. Congress has to fix it. And you know what that means? That means it's not going to be fixed.
It's not going to happen. It's not going to happen. It's a job killer if you try to fix it. So they're going to say, it's like on the Social Security side. They're not fixing that either because it's a job killer. So they're going to sit there on their hands and do absolutely nothing and watch this thing take place. So those of us who are going to be affected by it just have to sit and wait and see what happens.
So, I tend to agree, and ultimately, I always believe in trying to focus on what we can control, and at this point, the control of that is out of our hands, except for just speculation. So, what's the message you most want to send to our income generation viewers, listeners, in terms of goals they should have toward 2021, New Year's resolutions, and what they should be focusing on?
Well, what we're telling our clients, and I had a client in yesterday, we were talking about this very subject, and I said, you don't change your horses in midstream. It doesn't matter what the stream is doing. It may be going up or down, but you don't change your horses. What you do is you stay with the things that are working, regardless of what's going on. And when you're planning for income, that will overcome any kind of obstacles on either side of the aisle. It really doesn't matter, because if you're planning for income, you've removed yourself as much as humanly possible from the areas of risk, and you're trying to move toward a guaranteed situation. As much as you can guarantee anything, at least something that where you can live off the interest and the dividends on your investment and make sure that your principal is safe. I don't think it doesn't matter what happens. You don't change your horses in midstream. You continue to do what you've done and what's working for you. And that's what we're telling our clients right now. Stay the course. It's there. Let's stay with it.
That's good. It's good advice. And as long as we don't end up with a messed up runoff in Georgia and go blue wave, then stay in the course absolutely is the best advice. Dee, thanks so much for being back with us.
It was a great time. I enjoyed being with you guys again.
And you stay with us too. We have more coming up here in just a moment on the Income Generation. We'll be right back. I'd like to thank my guests, John Najarian and Dee Carter, as well as my good friend and co-host, Jeff Small, for joining us today right here on the Income Generation. Most importantly, I want to thank you, our new and returning viewers. As I said at the top of the show, no one has a crystal ball or can really see the future in tea leaves, tarot cards, or the palm of your hand. The future is unknown, and sometimes it brings twists and turns that no one could ever have imagined. The terrorist attacks of 9/11, the financial crisis in 2008, and certainly the coronavirus pandemic of 2020. As this year nears its end, we're all exhausted, we're all frustrated, but we're hopeful that brighter days are in store for 2021. And luckily, there are reasons to be optimistic. Promising vaccines are on the way, the political scene is becoming clearer, the bond market seems stable, the stock market's hovering near record highs, and at the same time, we know these next few months may mark the darkest of days of this very dark period, and could be the worst of times in many ways. We also know that even if brighter days do emerge in 2021, it won't happen instantly. It's going to take a while. The best we can do in the meantime is to continue taking the right steps to help protect ourselves in every way possible, and to make sure we're well prepared mentally, emotionally, and financially for whatever the new year has in store for us. So stay aware and stay informed on your own and through your advisor about the financial markets and the forces driving them. Most importantly, review your allocation and reassess your risk tolerance with the help of the right advisor. In other words, one who specializes in helping retirees and near retirees meet their goals to actively manage strategies geared toward retirement income. As always, stay safe, and thanks for watching. If you're close to or in retirement and you're concerned about your money, it's essential you stay informed and up to date. And as you know, right here is where you can do it on the Income Generation. I'm David Scranton, and we'll see you next week. I'm David Scranton, founder of the Retirement Income Store. If you're in or near retirement, are you certain you have the right retirement plan in place? Do you want to help ensure your nest egg will last you all throughout retirement? Take our retirement review quiz and find out in 5 minutes or less if you're doing everything you can to achieve a more successful retirement.
Don't waste any more time. Visit myfreeretirementreview.com to find out if you have the right retirement strategy in place.